The banana zone is that period in crypto markets which you would call altcoin season. It's when everything just starts going vertical. Now, it always comes in the US election year because of this cycle, which is the Bitcoin halving cycle, which is this everything code cycle. And it tends to come around the summer or autumn of that year, and things start accelerating and get silly. And when prices start going bananas, and they look like the banana. So there's some charts that I've shown on Twitter where, you can see the banana zone there on the left side of the chart. The prior banana zone is when suddenly you get consolidation, it goes up a bit, consolidates, and then it just goes bananas.
In a recent interview, Raoul, the CEO of Real Vision, expressed his excitement about this period, which he calls the banana zone. He describes this phenomenon by associating it with an altcoin season, where prices of cryptocurrencies, especially altcoins, rise sharply and rapidly. According to Pal, this is a period when alternative cryptocurrencies, or altcoins, outperform Bitcoin and experience significant price increases. Raoul also mentions that the banana zone typically occurs during US election years, which happens every 4 years. This coincides with the Bitcoin halving cycle, a period when the reward for mining Bitcoin transactions is cut in half, reducing the supply of new Bitcoins. He points out that this period of rapid price increases often starts in the summer or autumn of the election year. Pal also references charts he has shared on Twitter, showing historical patterns where prices consolidate or move sideways for a while and then suddenly spike upward, creating a visual representation of a banana shape. We will bring you more clips of Raoul Pal explaining more of his insights about this altcoin season. But before that, please take a little time to like this video and subscribe to the channel to show your support. Thanks and enjoy.
We've been given the new layer to the internet, which is the internet of value, the layer of ownership, settlement, all of this stuff. Now, unlike the internet, we couldn't own that. We can own this. So the more it gets used, the more the number go up and the more we profit from it. So it's this huge egalitarian, democratic way of distributing a huge amount of wealth to a huge number of people. To put it in perspective, this space is a $2.5 trillion space today. By the end of this cycle, it should be $10 to $15 trillion. By 2032, wow, if you continue growing at these kind of rates, you get to $100 trillion. So there's $97.5 trillion of money on the table, which is why I keep telling people not to fuck this up, because the opportunity is so big. And that is just by owning the new internet, essentially. So that's what this is all about. So there is a banana zone, which is the periods of time where it goes bananas. Then we get the corrective periods, and then we repeat this cycle again. Now, will everything repeat perfectly? Will it be identical? No. There's no guarantees come with this. But it's based on the liquidity cycle. It's based on the macro cycle. It's based on interest rates. It's based on a lot of things. If you think of what liquidity is doing, why the central banks and governments are injecting liquidity, it's to be able to fund the debts. We're in the big debt funding cycle this year, which is why the banana zone happens and why the everything code cycle, all of this happens. They have to fund all the debt. And so they inject liquidity into the system. They do it via rate cuts. They do it via the reverse repo. They do it via quantitative easing. They do it by any mechanism they can to roll the debt. And that's Europe, the US, China, Japan, the UK, everybody, right? So they all do the same game. So they're all teeing up. They've been waiting for inflation to come lower, ready to start hitting the accelerator. Liquidity has been rising, which is why the markets have been rising. But it gets to the phase where it has to go up a lot to finance, $10 trillion of stuff that needs to be financed. So that's all to come. And that tends to happen this year and next year. Coinbase has 108 million accounts, of which right now maybe 10, 12 million are active. As you start going to the banana zone, that starts going from 10 million to 20 million to 30 million. So suddenly it becomes a lot of voters. Add that to the political power of the firms that are involved in the ETFs, and it's now actually a funding issue for these people as well, because if if they say the wrong things, then the big financial sponsors for their super PACs start applying pressure. So I think it's much more of an issue than they first realized. And I think Liz Warren made a fatal mistake of saying we're building an anti-crypto army without realizing you're fighting a bunch of degenerate meme artists who are native to the internet, who are distributed everywhere. That's not an easy battle to take on. And I think they're starting to realize that this could be their own goal, because obviously RFK as well is running on a pro crypto format. So the Democrats, they either have to kind of fall in line, or they're going to try and say, we are the party that stands against this. But who does that play to? They're not going to get the swing voter by doing that.
Raoul Pal continued discussing the concept of the Internet of Value and its transformative potential in terms of wealth distribution and economic cycles, especially as they pertain to cryptocurrency markets. He believes that, unlike the original Internet, individuals couldn't own. The Internet of Value allows for ownership through cryptocurrencies and blockchain technologies. This new layer of the Internet enables individuals to profit as the network grows and becomes more widely used. Pal argues that this new system is egalitarian and democratic, providing a way to distribute wealth to many people. He sees this as a massive opportunity, likening the current $2.5 trillion cryptocurrency space to a potential $10–15 trillion market by the end of the cycle, and possibly reaching $100 trillion by 2032. Pal also touches on the political ramifications of the growing cryptocurrency market. As more people become involved in crypto, it gains political power. Politicians must be mindful of this growing constituency and its influence. For instance, Liz Warren's stance against crypto could backfire, as it opposes a significant and vocal group. With that said, let's all listen to what Raoul Pal has to say.
I've been following the ETH Bitcoin chart, and I thought it was going to turn. I thought the ETF was coming. I didn't think it was going to come at that particular moment. But I did. I even put out some sort of update on this. Just happened the weekend before this news came out. So why we're not getting much follow through right now is we're not getting much new inflow into the system. So people are switching a bit of their soul into the ETH and FOMOing into this trade, but really the game starts when the ETF launches. Because most people are fully allocated. It's not like any of us are sitting with cash on the sidelines, right? So we're all fully allocated. So you have to switch from one to the other. I think people will switch, some of their Bitcoin for ETH to play this trade, but it's the institutional flows. I think the big game in town is going to be what is the narrative that BlackRock comes up with. This is the game. Okay. I think it's going to be tokenize the world. The other thing important to notice is that ETH is a third of the size, and then 20-something% of all ETH is staked. And then there is, if you generate a lot of on-chain activity, you'll end up starting to burn ETH again. So what you've got is actually very limited supply, and most ETH is just held and locked away, either staked or unstaked. So there's very little free float of ETH. So it depends what kind of price action we see. All BlackRock need to do is just add it as part of the portfolios. We've seen this before. So I don't know. Will we? Let's say the Grayscale loses $5 billion. Will we get $5 billion of inflows? Probably. Over what time period? 3 months. Outside of the ETF just gives them the cover to use ETH as their foundational layer for the stuff that they want to do. Because Goldman Sachs is not going to be using the ETH ETF. It wants to use ETH, as does JP Morgan's everybody else, to tokenize assets and do other stuff. What is super interesting to Wall Street is yield. Yield allows you to build products. You can do all sorts of things with yield. You can take the ETH yield and buy call options to give you upside or guaranteed products. You can create structured products. You can do lots of things. So I think that they've always been interested in ETH, and I've said this for a long time, is the ETH yield is the big game in town. Not because it's high yield, but you can do lots of financial engineering once you've got yield. They also all want to build on the technology, whether it's on a layer 2 or on ETH itself. But this is where they're going to start tokenizing a lot of assets. Nobody gets fired for using Ethereum. So,
Yes.
That's a choice. And most of these people have been building, most of the banks have been building in this space and had teams since 2015, 16, 17. So if you think of the technology they've been using, it's generally ETH. So they understand ETH. ETH is the big one. You don't get fired for it. Your board's not going to tell you off. Why did you use some random thing? But we've now got the flexibility of the layer 2s, which makes it cheaper and easier, depending what level of security they need. So look, I think it's a very, very big deal for the financial markets. Much bigger than it is for retail.
What are your thoughts on Raoul Pal's predictions about the banana zone? Do you think we'll see a significant rise in altcoin prices this election year? Share your thoughts in the comments section. If you found today's video informative and would like more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, exploring, and, most importantly, investing wisely. Thank you for watching, and we look forward to seeing you in the next video.